Hey guys, thanks for tuning in. All right, just gonna give it a couple of minutes for us if you guys to stream in. Yeah. Okay, good stuff. Nice to see quite a number of you guys coming in. All right, we've got Derek, Jerome, Kevin, Mark, Promise, Samit, Sven, Vijay, a couple more streaming in. Thanks for tuning in nice and early. Are you guys able to hear me? Right, are you guys able to hear me clearly? Hey, Sumit, good to see you, man. All right, Seven, nice to see you. Did I get the name pronunciation correct? Seven, is it? All right. Mark, nice to see you. Right. Vijay, nice to see you too. Right. If you want, guys, you can adjust the you can adjust when you're typing in the chat. You can actually adjust it to send a message to drop down everyone. Right, so we can see each other's messages. It might make it a little bit easier, when we're asking questions, right? So you'll be able to see each other's messages, and it might be a little bit clearer on. Let me change. Yeah, it might be a little bit clearer on what someone else has asked. All right. But today's trading strategy, right? Today's webinar is a pretty exciting one. It's on the candlestick pattern trading strategy, right? I think most of you guys will be familiar with some form of candlestick trading, right? Price action, right? I'm not sure. Do any of you guys over here use price action or candlestick in trading? And if you could share with me, like, what are your top patterns you use? Right? Do you use the engulfing candles? Do you use the maybe the head and no, not not the head and shoulders? I mean the tweezer top, tweezer bottom, right? Gravestone dojis, dragonfly dojis, right? If you want to, please share with me a little bit so I roughly know the knowledge level, or rather like familiarity that you guys have when it comes to using candlesticks and price action in trading. All right. Now, of course, what I always encourage you guys to do is that I literally have another screen open here by the side, just monitoring the questions that you guys have. So if you have questions, please send it through right away. Don't wait until the end of the session, right? Because if you send it at the end of the session, trust me, we rarely ever have time to answer everyone's questions, right? So all right, Mark, right? I'm sure you enjoyed today's session, right? It's a very I will really explain how candlestick patterns work, right? I will explain how candlestick patterns work and also the anatomy of a candlestick. So you get a better understanding of what is this amazing thing that we use, right? Promise, yeah, if you have a question, please send it through, right? Don't worry about raising your hand, right? I'll be able to attend to you. Clear voice, all right, awesome, Derek. I'm glad you guys can hear me. Okay, now disclaimer as usual, guys, remember everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, all right? Moving on, right? Moving on. All right. So for those of you guys who wonder who I am, my name is Desmond Leong, right? I'm the CEO of Everest Fortune Group, and I run an award-winning research firm. We're finalists for Best FX Research 2019, 2020, and 2021. And we're also finalists for Best Equity Research 2020 and 2021. So we usually work with the major financial institutions out there, brokers, banks, right? And we have a special partnership with IronFX where I bring guys the good stuff, the juicy stuff, the stuff that really take your trading to the next level. So this is not the kind of stuff where you're going to find on Baby Pips, right? Or Forex Factory, right? It's really the different level of stuff that really can help you be a better trader, right? I can let you know, I'm a young guy, right? 33 years old, right? Full-time trading, right? And the important thing is that you don't need 30 years, to learn how to trade. You just need 30 days, right? Learning the right things, and you can be a good trader, right? So that's one word of encouragement I want to share with you guys. And of course, the dangerous thing about trading is that you can actually learn the wrong stuff, right? So a lot of stuff out there on Baby Pips, Forex Factory, nothing against them, but it's very unfiltered. So you might get some good stuff, but you can get a lot of bad stuff too, right? And that is the danger, right? Because you end up applying the bad stuff to your trading, and it's not like studying, right? When you study, right, the more you study, the better you do, right? It's like a positive correlation, right? The more you study, the better you do your exam. But in trading, a lot of people try to apply the same logic to trading. They think that the more they learn, the more they read, the better they're going to do in trading. But that is very far from the truth, because you can end up applying it wrongly, right? You can learn the wrong stuff, you can learn it wrongly. You can learn the right stuff and you apply it wrongly and you still lose money, right? So it's in trading, why it's so fun is because it's like the ultimate test. You know, if you can do it well, right, you can earn more than someone who has a master's or PhD, right? But of course, it's the toughest thing to do, right? It's a lot of traps. There's a lot of mistakes that people can make. And here at IronFX, we're going to do our best to teach you, guide you correctly. Okay, Dahiru, nice to see you tuning in from Nigeria, right? Actually, I'm curious, right? If you guys don't mind, you can let me know where you guys are tuning in from, right? I think we have got quite a number of you guys from all over the world. Okay, I'm kind of curious to know where you guys are tuning in from. I'm kind of curious to know where you guys are tuning in from. And for those of you guys who are curious where I'm tuning in from, I'm tuning in from Singapore. Okay, we got Mark from UK. We got Jerome from Germany. Nice to see you, right? Derek from Ghana. We got Promise from Zimbabwe, right? Wow, it's really from everywhere. Sumit from India, right? Vijay from UK. Good stuff, right? I am visiting UK this September, right? I should be visiting UK this September with my wife and my kid, right? It's probably going to be pretty fun. I heard that it rains a hell lot in in UK. I'm not sure how much of that is true. But yeah, I'm going to visit a few places. Hopefully, if I'm lucky enough, catch a Manchester United match somehow. We're going to London. We're going to London, right? Yeah, it's always raining, right, Mark? Apparently, I don't know, man. Every time watching the soccer matches, it's always raining. It's very funny. I'm like, why the hell does it rain so much in UK, right? But I'll be visiting London, right? If I have a chance, I'll probably hope to swing by Manchester, catch a Manchester United match, right? Finally, I'm a Man U fan, so hopefully I can finally catch a match live with them there. But yeah, I'll be in UK in September. You can hit me up there. All right. I'll hit some of you guys up there if I happen to be doing a webinar there. Okay. Now, let's begin today's session. Right. Before we begin, I want to point you to a few important places. Okay. The first important place, ironfx.com. You click on this thing called VIP room. Okay. VIP room, IronFX, right? We have a special VIP trading room. Is really awesome, right? In my honest opinion, it's really awesome because in this place, you can actually practice your analysis. You can practice your trading, right? Of course, you know, in this VIP room, you get research from us, right? You get to practice and you get to ask us questions directly. Any of you guys who use Discord or Telegram would be familiar with the way that you can add mention people and stuff. And of course, you know, that's me. If you want to request for a market forecast, you can do that too. You can ping me and say, hey, Desmond, you know, what's up? Can you take a look at Euro Pound for me or Euro Dollar, right? If I'm around, any of my team is around, they'll be able to answer you. Okay. It's a pretty fun place, right? You need $250 in your IronFX live account to get access. The more you put in, the more access levels you're granted. Okay. And then of course it's a pretty simple thing. You just need to log into IronFX. And once you're in the client portal, you click the VIP room and it will automatically give you access if you have enough funds in your account. I want to show you, right? I want to show you how it looks like when you're inside. This is how it looks like when you're inside, okay? And one of the main benefits of this is that I can come here, like I think I was looking at, was it Kiwi dollar recently, at a potential double top pattern, right? Let me just take a look at here. Give it a quick second. All right, so we are here on Kiwi dollar. I'm looking at the 1-day chart, right? And I am wondering if, like, you might be thinking, hey, Desmond, is this a double top? Right, I'm gonna delete this, right? You might come here, draw this, right, and say, hey, Desmond, right? Could this be a double top reversal, right? Which which level? Just let me delete the random stuff that I drew previously. Yeah. So could this be a double top reversal? Where am I referring to? I highlight this word. I click on this button called link object to text, and I just click on any line that I just drew. Or if I want to, I can also draw additional lines inside, because could this be a little bit of a double top reversal, right? Confirm it, and I send the message through. Okay, so if anyone is reading the message for the first time, right, they'll be like, hey, Desmond, could this be a double top reversal? When they hover the mouse over it, you can see that it lights up on the chart directly. This is really, really powerful, right? And then we can have a nice little dedicated discussion on it, but it lights up on the chart directly. And this allows me to give, this allows you to give context to what you're writing. So if it's a trend line, support or resistance, you know, a selling level, take profit level, right? You can come in here, use this feature, and you can ask us, right? And, you know, I can much more easily, you know, diagnose your trading strategy for you, versus, you know, like what people do on Telegram, they just send screenshots and stuff, and it's very, very messy. All right. So this is definitely one of the great things that we have at IronFX, right? You find me and the rest of the team inside. So feel free to come in and ask us questions. Okay. As long as you have a live IronFX account, log into IronFX client portal and you will be able to see it. Okay. Now let's begin today's session. Okay. Our agenda for today, I'll be touching it really quickly. You know, we're going to take a quick look at introduction to price action. What is an anatomy of a candlestick? Reversals versus breakouts. Okay, I have a secret tip. It's called the lead up. Right, so this actually helps you find a lot of better trading strategy, candlestick patterns. Okay, the secret is in the lead up. All right, I'll be sharing you some of my most effective patterns, 3 or 4 of them, and then I have an MT4 candlestick indicator giveaway. Okay, one of the most popular indicators on Google or in the world, right? You search for best MT4 candlestick indicator, right? Number 3, this one by the Forex Army, right? Of course, that's me over there, right? Yeah, I've created one of the most popular candlestick indicators. It's one of the most powerful indicators too, right? It takes a while to load here and there. Yeah, but it's one of the most powerful indicators. It's pretty expensive, but we're going to give it away for free. Right, as long as you have an IronFX account. I'll be sharing with you a little bit more details on how you can get it later, towards the end of the webinar. So hang around, stick around, and I'll let you know how you can get it. All right, a really good tool to help you trade better, honestly. Okay, now let's begin. Anatomy of a candlestick. All right, anatomy of a candlestick, right? When you look at candles, most of the time, right, you see a bullish candle or you see a bearish candle, right? They are not necessarily green and red all the time. Right, just that what you need to know about candlestick is that there's an open price, right? There's an open price over here where it starts. Now imagine the journey. Imagine the journey of a candlestick, right? It goes all the way to the top, all the way to the top, right? It comes all the way. This is the high of the candlestick. You know, so you notice there's this thing called the wick, right? The wick, or some people call it the shadow, right? That's where it goes all the way to the top, then comes all the way to the bottom. Price comes all the way to the bottom, right? So that's where there's a lower wick, right? And then it comes all the way to the top and it closes over here, right? So if the closing price is above the open price, it's a bullish candle, right? It's green. If the where's my mouse? If the closing price is below the open price, right? That means it's a bearish candle. The little wicks here, as you can see at the top and bottom, basically just mean like how high or how low price actually went during the candlestick. Okay, so this is anatomy of a candlestick. There are many different chart types out there. Meaning that you have the line chart, you have the bar chart, you have the candlestick chart, you have the variations of the candlestick chart like the Renko chart and the Heikin-Ashi chart. But the most popular one are the candlestick charts because it gives you a lot of information at a glance, and it also gives you the trading psychology of a trader when they are using the candlestick chart. Okay, very, very useful. I really, really like it. All right, so when it comes to trading, right? When it comes to trading, we actually honestly only want to know 2 things. Is price going up or is price going down? All right. Is it bullish or is it going to be bearish? Okay, now, very simply, what do I mean by what do I mean by this, right? When you have a level over here, and prices over here is going up, is going up, is going up, is going up, and it touches this level, one of two things can happen. If it breaks out of this level, this is what we call a breakout. Okay. If it reverses from this level, that is what we call a reversal. In trading, you only want to know whether it's going to be a breakout or it's going to reverse. Okay, I'm going to repeat that again. In trading, you only want to know if it's a breakout or if it's a reversal. All right. If it's a reversal, yeah, then, it comes down, right? This is when price reach resistance. The opposite is true. When price is coming down, it touches this level, it can either bounce, which is called a reversal. That means it reverses its direction, or it can break out, meaning that it breaks through that level. Now, candlestick patterns are very useful in helping you get a good chance of forecasting this accurately. Of forecasting a bounce, or forecasting a reversal, or forecasting a breakout, depending on your candlestick pattern. Let me show you why. So we have a channel over here. Okay, in this example, we have a nice little channel, right? A nice little channel, bullish channel going upwards, right? Price is kind of dropping very strongly over here. What happens is that price drops all the way to here and it forms a morning star formation. Okay, a morning star formation. A morning star formation, meaning that, there's a nice little, I think it's like there's a bearish candle. There's a bearish candle. There's a nice little star. And then there's a bullish candle. Okay, this is called a morning star formation. So a morning star formation formed right at the trend line, the channel support, right? This is a very good indication of a possible bounce, right? So you can see from here, what happened is that price did start to bounce up very nicely. Okay, so this is the thing, right? When price reaches this level, right, what you want to do is there are a lot of different candlestick patterns you can look at. Some candlestick patterns help you forecast whether the bounce is going to happen, and some candlestick patterns help you forecast whether the bounce is not going to happen, right? So this is what I mean by a reversal. Okay, very simple reversal. We're going to look at the flip side, right? What happens if it's not a reversal? This example over here, nice resistance. Price has reacted off this level 1 time, 2 times, 3 times, 4 times, 5 times. This is a very nice resistance level. Okay, and price is currently over here. So we expect prices to go up and test this resistance level. Usually when it tests this resistance level, what happens is that it reverses. Okay. Now, let's see. Price comes up and tests this resistance level. And if you know candlestick patterns, what you notice is that this is what we call as the 3 white soldiers. Okay, 3 white soldiers over here. The important thing that you need to know here is that they are soldiers. Soldiers are big people, right? The strict definition of soldiers is that, you have a head, you got a body, you got legs, right? So it should not be a case like this. Is not a candlestick like this. It's not 3 white soldiers. Right, this is a guy with a very small body, a soldier with a very small body. Okay, if it's like this, perhaps, right, you got a big body, you got the head, and got the legs, maybe it's fine. Right, so you notice most of them are like this. You're looking for 3 proper soldiers, not 3 babies. All right, so 3 white soldiers is a very good indication that price might break out. It's a very good breakout candlestick pattern. All right, so true enough, when this candlestick pattern happens, what then happens is that you have 1, 2, 3 white soldiers. It breaks this resistance and price takes off, right? So this is our example of what happens when price comes and then breaks out. Okay, this is definition of a breakout. All right, so you can see over here that the candlestick pattern that occurs at the resistance or support gives you a very good idea whether price is going to break out or price is going to reverse. Okay. Now, Now that we know what's reversals and breakouts, let's then go to the key thing. One of the big things that you need to know when it comes to trading, right? And it's this thing called leading up to the pattern. Okay. The problem with most trading strategies out there is that when they are trading, they actually focus too much on the pattern, right? So for example, if I have a hammer stick, if I got a hammer formation, okay, this is a hammer formation, right? Hammer formation is usually a bullish signal. Now, a lot of people just focus on scanning for this hammer over here. But the thing about candlestick patterns is that you need to factor the lead up. A candlestick pattern is actually not just a candlestick by itself, but is this part that leads up to the candlestick. This part over here. This is the secret sauce that if you don't learn anything else in this webinar, you should learn about, right? The lead up is super duper important. Okay, the lead up is super duper important, right? Because if you don't have a lead up, I will show you what's going to happen later. It's going to be very, very messy. But if you have a lead up, then you then want, like, for example, if it's a bullish reversal, you want your lead up to be, you want price to be dropping lower, 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 and then a bullish candlestick to signal it to go up. Okay, you can't have a bullish bullish hammer, right? When price is kind of rising upwards this way. When price, technically they are both the same candlestick. This is a bullish hammer candlestick. This is a bullish hammer candlestick. They can look exactly the same. But if price is coming down this way, this makes it a very nice bullish reversal sign. But if price is coming up this way, it changes from a bullish hammer into a hanging man. And that becomes a bearish signal. So you see, just changing the lead up, right, to the candlestick pattern changes it from a bullish to a bearish, or bearish to a bullish kind of a signal. Okay, so this is one important thing that you need to factor. A lot of candlestick indicators you find out there, which I'll be showing you examples of later. A lot of candlestick indicators that you find out there, they kind of just focus on scanning for that one candlestick, right? Hammer, okay, this fulfills the criteria of a hammer. There you go. They don't factor the lead up to it. All right, the candlestick indicator we created, right, does factor the lead up to it. That's why it's so effective. This is how it kind of looks like. You notice that there'll be a bullish hammer candlestick pattern over here. And price did take off very nicely from there. But the important thing to take note of is that this candlestick pattern actually scans the movement before the indicator, before the candlestick pattern, right? It ensures that it's in the middle of a downtrend, as you can see over here. Downtrend, a sizable downtrend, before it finds the candlestick pattern over here, then it triggers a move up. Okay, why a sizable downtrend? Let me explain that next. So I'm going to come back to here. I'm going to erase, and I'm going to explain a concept to you. Okay, now, why is ATR? Okay, why do you need to measure like the size of the downtrend? Why can't you just have why can't I just say, like in this example, I have 3 bars before it, it's higher. Is higher than the hammer, and that forms a downtrend, right? Why do I need to factor in stuff like ATR? ATR means average true range, right? It's a good gauge to it like measures the volatility of the market, so it actually helps you automatically adapt, right, your strategy. Now, a little bit complex, but don't worry too much about it. Okay, it's not part of the trading strategy calculation. Right, but why it's important is because you can have a candle over here, this candlestick. Okay, if your candlestick pattern, this hammer over here, right, but the candles that are leading up to it are like massive bearish candles over here, right? These are the bearish candles that are leading up to it. This little candle will not work. Right? You think about it. You are going to war, right? You're going to war with this little hammer trying to say that a reversal is going to happen. You can go with the hammer of Thor, right? For those of you guys who are familiar, I think it's Myoja or something, right? Don't know what it's called. I think it's called Thor hammer, right? Tor hammer. Yeah. You can go with this hammer over here, which you have a high chance of, winning the battle. It's a big hammer. Or you can go with a hammer where you can go with a toy hammer, right? And it looks something like this. You're not gonna win you're not gonna win any wars with this hammer. All right. So the size of your hammer, the strength of your hammer is very important because, right, the part that is coming down to you, the war that is coming down to you, right? How successful you're gonna call the reversal depends on how strong your hammer is. Okay. A very, very important point to take note of. Most people, they just find a hammer and they find a technical definition of a hammer and they think it's strong enough, right? You need to find a sizable hammer to fight a sizable enemy, right? If you're fighting Thanos, right, you need a big hammer, not a toy hammer, right? So if you're going to call a reversal in the market, you usually need a bigger hammer. The bigger a hammer, the better, right? That means you want something like this. You don't want a hammer like this and a tiny handle. That's not going to work, right? You want the bigger the handle, the better, right? Of course, you don't want something that the handle is a little bit too big, right? That becomes like what kind of funny hammer is that? Okay, so you need the group proportion of it too. Things to consider, right, when it comes to trading, right? Things to consider when you find a hammer. So this is a nice little hammer, as you can see over here. This is the opposite of a hammer is a shooting star, right? So imagine you take a hammer, right? A hammer over here. You flip it upside down, right? It's a shooting star, right? So the opposite of a hammer is a shooting star, not necessarily a hanging man. It's a shooting star like this, right? And it's very, very good at calling reversals. The bigger it is, the better, right? And of course, you need to find the lead up to it, right? Before you take the fight, and you call the reversal, okay? So if you know how to do it correctly, this is the candlestick indicator that we have. We are repeatedly consecutive good trading signals that we have. And each time it reversed really, really nicely. And it's because when it comes to trading, you need to factor in like at least so many different kind of factors, right? Most candlestick indicators don't do this properly. And I'm going to show you what happens if there's no lead up, how it looks like. Okay, so this happens when there is no lead up. Okay, so this is a HMR, hammer, 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 hammer. Technical definition, this is a hammer. You can see this hammer over here. It is a hammer. There's a head, there's a handle. 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 All of it are technically correct that it is a hammer, right? You got head, you got a handle, you got a head, you got a handle. But because they don't factor the lead up to it, right? You can end up finding all of these are actually telling you to buy. You have lost so much money if you have followed these kind of trading signals with this candlestick indicator. Okay, and that's the danger of it, right? And that's what most candlestick indicators out there do. Right, they just use the technical definition, right? The head is like that, the handle is like that. Bam, that's a hammer. Hammer, what does it mean? It's a bullish signal, buy. Right? If you keep doing that, you end up losing so much money. Right? So the thing is, candlestick patterns are useful. They are good, but only if you use them correctly. Right? A lot of what you see out there don't work. This is another example of it. Right? It has a whole bunch of different signals over here. This is when it's asking you to buy. This is when it's asking you to sell. You lose a lot of money. You buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. You got buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. End up losing a lot of money, right? And that's another thing that happens when you don't use a proper lead up, a proper filter, right? You compare what you're seeing over here, all these different signals. You compare it to this. You get less signals, but each time you get a signal, it's a very, very nice trading pattern. A very, very nice setup that occurs. Okay, so that's why it is so important to have a lead up. This is another example of it, right? You see so many shooting stars, spinning top, bullish engulfing, 3 black crows, right? All of it over here, you're going to lose so much money buying and selling, buying and selling, buying and selling, buying and selling over here, right? And this, if you search for like best MT4 candlestick indicators, these are out there, like the top few, right? They are the most popular on Google. But as you can see, being popular on Google does not necessarily guarantee that it's a good quality, because I'm looking at this from a professional perspective and it looks terrible. A lot of the indicators, if you use them, you're going to lose a lot of money. Okay. Now, okay. So one of my favorite patterns is the hammer. A bullish, the hammer is actually a bullish signal, right? As you can see over here, this is a hammer. Now, very, very important thing to talk about. Why I say hammer bullish is because I don't like this version, the hanging man. Both of them, if you look at it, they are a little bit like a hammer. They have a head and they have a handle, right? But a hammer is actually only good for a bullish reversal. Let me explain to you the concept. Okay, let me explain to you the journey of price. So price is going lower, 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 lower. Once it reaches this level over here, let me explain to you the journey of price, right? It reaches this level. The bears, which are pushing prices down so strongly, actually push prices all the way down, all the way down, all the way down to here. The bulls take over. They push it all the way up, all the way up, all the way up, all the way up to here. And not only all the way up to here, it pushes it even stronger to overpower the bears, and it ends on a high, right? So it ends over here, and that's why it's a nice hammer triggering a bullish signal. Okay, now let's look at the opposite, the hanging man, right? So you can see the bulls are pushing prices up, pushing prices up, pushing prices up. When it reaches this level, right, the bears actually start pushing prices down. So you can see that the bears are successful in pushing prices down, but the bulls take over and it pushes prices all the way back up to over here. So you notice that the bulls actually end on a high, right? So this to me is not as strong as this, right? In the first case, right, the bulls overtake the bears, end on a high, and goes all the way to the top. In this case, the bears, although they were kind of effective, they actually push it all the way down, and the bulls take over and reach over here. Just give me a quick second. I need to just give me a quick second. I need to check something. All right, guys. One second. Sorry, guys. I just needed to the missus was calling, so that's one call you don't want to ignore, right? So yeah. Anyway, I'm back. Sorry about that. Right. So yeah, the hanging man, right? You notice that the bulls, all right, actually took over all the way, and it took the fight to the bears. So it's not as effective. So when it comes to using this kind of hammer pattern, it's usually good for a bullish reversal, not a bearish reversal. Okay. Next thing that I want to talk about, right? So you can see, if you know how to do a bullish hammer properly, you have a nice little lead up to it, bullish hammer, and bam, you can see prices go all the way up. Okay. The opposite is true for a shooting star. So shooting star, I specifically mentioned, is bearish. Why? Because in this example, you notice a shooting star forms something like this, right? This is a shooting star. A shooting star can happen at the bottom or at the top. At the bottom, they call it an inverted hammer, and it kind of sucks, right? I don't really like it, right? Because what happens? Price is going down, price is going down, price is going down, right? Price comes all the way down to here. The bulls push it all the way up, but the bears push it all the way down, and it ends almost close to the bottom. It's not exactly a good thing if the bears are able to take the fight to you so much. So even though it's a bullish reversal, right, it is actually a weak, it's a weak sign of it happening. So I don't try to use it here. It is much more stronger when it's calling a bearish reversal, right? Even though they look the same, a lot of people think that, you know, all candlestick patterns, you know, whether it happens at the top or at the bottom, bullish or bearish variations of it is the same. But the truth is, right, it's a lot better in a bearish setting. No, when calling a bearish reversal, because you got price, you imagine this, right? You got the bulls pushing prices all the way up, reaches here, and the bulls were like, all right, let's take over this town, right? They keep pushing prices all the way up, all the way up, all the way up. The bears take over, knock them off their perch, push them all the way down to the entry, push them beyond the entry, and it ends over here. So that usually has a lot more bearish momentum to take prices down and call a reversal. That is why when it comes to a shooting star, you use it for reversal. Okay, you don't use it for you use it for a bearish reversal. You don't use it for a bullish reversal. Okay, if you know how to do it correctly, you can see it works out very nice. Nice shooting star over here, right? Bam, price goes down. Nice shooting star over here, bam, price goes down, right? But of course, the trick is in the lead up. You must find a proper lead up, right? You must find a proper lead up. If you have a good lead up, you got a good pattern, gives you a really good chance that you can call a successful reversal. Okay, guys? Now, the Dragonfly and Gravestone Dojis, they're my third favorite, right? My third favorite setups, right? These are how it looks like, right? Dragonfly looks like this, you know. Imagine there's a doji, right? There's a Dragonfly Doji, and there's a Gravestone Doji. When you see a single line like this, that means the open price and the close price, right, are exactly the same. These are very strong signals, are pretty strong signals, right? And like most cases, the bigger the dragonfly, the stronger it is, right? So if you see a tiny dragonfly over here, it's not going to work out that nicely. But I see a dragonfly, a massive dragonfly, right? Firstly, run for your life, right? It's a bit scary. But secondly, it's going to be better at calling a bullish reversal. It's going to be better to call a bullish reversal. Same thing as a gravestone, right? You see a gravestone, a small gravestone means nothing. A big gravestone, right? You see a very, very big gravestone, then you know that there's a high chance that a reversal is going to happen successfully. Okay? These are important things to take note of because if you know how to do it correctly, you can see price is going up, 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 up here. Very strong, bearish gravestone doji. And when that happens, you know, you can see prices go all the way down. Okay, very, very effective. But of course, always factor in the lead up to it, right? You must always factor out the lead up to the pattern that happens. Okay. Last pattern which we'll be looking at is called the engulfing candle. Okay, the engulfing candle over here is my favorite. It's my favorite. Okay, let me explain to you over here the engulfing candle. Engulfing candle is simple. There's a bullish engulfing candle and there's a bearish engulfing candle. Bullish engulfing candle is simple, right? You notice that the entire body of the candle must engulf. It's a 2 candlestick pattern, meaning that the first candle over here gets engulfed by the next candle. Okay, so this is bullish engulfing. That means the bigger candle is a bullish candle. Bearish engulfing is like the bigger candle is a bearish candle, as you can see over here. Okay. So bullish engulfing, bearish engulfing, very useful, but a lot of people use them wrongly, and that is where we're going to explain a little bit more. Okay, we're going to explain a little bit more. Bullish engulfing. Okay, bullish engulfing. Come on here. This is technically how it's supposed to happen, right? A bullish engulfing candle happens after a downtrend, right? There is a nice little candle here, right? Then the second, the first candle has to be bearish. And then, of course, the bullish candle comes in and engulfs it entirely. And then, it comes, that's where you see a nice little reversal. This is very useful, but only if you use it correctly. Because I've seen so many indicators out there that forecast it wrongly. But if you know how to use it correctly, it's one of the best double candlestick patterns out there in calling reversals. Okay, let me explain. Firstly, you must imagine I'm not sure if any of you guys watch boxing, right? But in boxing, or maybe soccer, right? The opponents you play against is an important thing. You can have guys like Manchester United or Manchester City or Barcelona, right? You got big guys, right? And you play a match, right? You play a match. So if you play the match against maybe some small team in the Coca-Cola League, maybe Coventry or something like that, they're not even in the Premier League, right? If you played against them and you won, what are people going to say? People are going to be like, yeah, so what? Not that impressive. These players, they are from a lower league, right? It's expected that you win. But if you play it against a bigger one like Manchester City or Liverpool or Barcelona, right? If it's this matchup over here, then it's a very, very big, exciting match, you know, two big heavyweights playing against each other. Then, you know, if Manchester United wins, they'll be like, okay, Manchester United, you know, we are bullish on Manchester United. They have a chance of winning the Premier League. Okay. No one would say that if Man U won Coventry, but people would say that if they won Manchester City or if they won Barcelona, right? So you must think about the same thing. When it comes to engulfing candle, you have a big engulfing candle here. If your opponent was a small little candle, right, like Coventry, you know, people are like, yeah, so what? You know, it's you did engulf him, you did win, but the previous candle is just a tiny candle. But if your previous candle was a big candle, if your previous candle was like Manchester City or Barcelona, is fairly big, and you won it, then people be like, oh wow, you know, you really won an important, very big match, right? Then your engulfing candle, you got a higher chance of a reversal happening, a successful reversal. Okay, most people don't realize this. They just use the technical definition of an engulfing candle, and they just run with that, right? They just see, you know, you have one tiny candle over here, and then bam, you got a bigger candle, right? They'll be like, oh, engulfing candle, it works, right? Although they don't factor in that the candle that they engulf was a small candle. So because of that, even though yes, they are right, this is technically an engulfing candle by the technical definition of the book, right? But it is not a good signal to go long because your opponents are just a tiny opponents. You need to factor in the size of your opponent when looking at an engulfing candle. Okay. Another thing, this is an example of terrible examples of engulfing candles, right? So this indicator showed that this was an engulfing candle, right? But the problem with this engulfing candle is that when it comes to engulfing candle, the majority of your candle should be the body, like this part, the body. This is the body. You should have very little of the wicks at the top and the bottom. So you can see over here, the candlestick was theoretically correct. The body was bigger than the previous body. But you can see there's a long shadow over here. Same thing over here, there's a long shadow. So even though the body was bigger than the previous body, but because of the long wick, you know, they have a very long wick over here. It makes it a wick engulfing. It's not even an engulfing candle. Although from a technical perspective, yes, the body is bigger than the previous body, right? The body of this candle is bigger than this body over here. So that's the technical definition is correct, but the effectiveness is not there, right? So this is a danger this is why it's important for you guys to know how candlestick patterns look like. When you go out there, right, and you see all those indicators, TradingView has candlestick patterns indicators, right? MT4, MT5, they got candlestick pattern indicators, but if you use them wrongly, you're going to lose money, right? You don't take everything at face value. Don't take whatever indicators you see out there when they throw on an engulfing candle, say, oh, it looks like one, right? If you do not know your knowledge, if you do not learn and understand how candlestick patterns are, and you use that as a signal, you're going to lose money and you're going to lose hope in trading, right? So it's important for you to really brush up your knowledge here and understand that a candlestick pattern, yes, theoretically is correct, but you want to make sure there's as little of the head and shoulder, the shadows as possible. And of course, the person you fight against has to be equally big. Don't just fight a small guy, win a small guy, and think it's a good engulfing candle. Okay, very, very important when you trade. When you use it correctly, you can see very nice bullish engulfing candle that fought a big guy. Price really shot up over here. Bearish engulfing, big bearish engulfing versus a big bullish candle. If it works out nicely, price drops very nicely. Okay, so you can see here what I mean, that you need to use it. You need to use candlestick patterns carefully, right? You need to factor in, you need to think about the concept. Not only the candle, but the candle before it. My favorite, I'm going to just go and touch on two more patterns, tweezer tops and tweezer bottoms. I really, really love them for calling nice little reversals. Not much to explain here. Just remember, in a bit of a downtrend, why I like this is because of the psychology behind it, right? Imagine price open here, got pushed down to here, all the way down, and then it end over here. But then the next candle opens, It continues to try to push it down, but then it pushes it up and it ends over here. It technically kind of seems like a double bottom and a double top within a single candle, right? That's why it's actually pretty effective. If you really broke it down into a smaller time frame, it would kind of look like a double top and double bottom, right? Just that on the higher time frame, it looks like tweezer bottoms and tweezer tops. Really good formations if you see it. Importantly, is that tweezer, you have to look at price kind of the extreme levels of the tweezer, right? It should line up pretty similarly to each other. Okay, as you can see over here, you know, it's not like one tweezer is like this and one tweezer is like this, right? It's not like this, you know, both tweezers end about at the same level. Okay. Another of my favorite pattern, triple candlestick pattern, morning star, evening star, right? It requires 1, 2, 3, 1, 2, 3. This happens a lot less in Forex because you don't get that much gaps over here, right? You can see the gaps over here. You can see the gaps over here. This happens a lot less in Forex, but it happens a lot more in indices, in shares. So if you do see it, right, it's a pretty good one to use, right? But if you ever wonder why you don't see the gaps that much in Forex, is because of the gaps. A lot of people talk about these patterns out there, but you won't find it that easily because of the gaps. Like in this case, for this to happen, price needed to gap down all the way down to here, right, to be the open price, move all the way up to here to be the close price, then it gap up again to be here. So these kind of gaps don't happen that often. Okay. Last one, 3 black crows and 3 white soldiers. Very good. Very good reversal, very good momentum indicators, right? 3 black crows. What you want to notice is that the crows are all of the same size. The soldiers are all of the same size. And remember, they need to be bigger than average, right? That means you're not looking for 3 tiny crows, right? 3 tiny crows. You're looking for 3 sizable black crows, right? So you're not looking for 3 sparrows, right? You're looking for 3 crows. Same thing as soldiers. You're not looking for 3 baby soldiers or 3 babies. You're looking for 3 white soldiers, sizable soldiers. Okay, really good for calling reversals. Now, the candlestick indicator, which I'm talking about over here, right, is a really intense indicator I created, right? It has more than, I think, 50 different points just to find a single candlestick. It is so advanced that we need to, when you load the indicator, you need to load a separate CSV, Google Sheets, Excel sheet, just to be able to factor in all the different kind of nuances, right, to forecast a candlestick. And of course, when you do it well, it's able to forecast such reversals very nicely. It's able to forecast such reversals very nicely. It's very expensive if you get it out there, but of course at IronFX, we're going to give it to you guys for free. Okay, you notice that, yeah, if you don't have good ones, this is what's going to happen. You're going to have lousy setups, as you can see over here, which is not, many of the indicators out there, not that great, right? They give a lot of false signals, right? With our indicator, you usually get a better chance of getting a nice signal, a nice, the lead up to it, right? And price goes up. All the signals are preloaded for you, right? You see a lot of these appear. Nice little hanging man, nice little reversal, right? It all works out very nicely, right? Nice bearish Gravestone Doji, nice lead up to it, nice reversal. Okay, now I'm just going to end here and let you guys know that if you want to get access to it, it's very simple. Step 1, if you have an IronFX account, good. If you don't have it, open a live IronFX account, put in at least $250, and you drop an email to either Kyriakos or this. Let me just copy and paste this. Let me just copy and paste this so that you guys are able to can I just copy this? Yeah, just let me. Yeah, just let me copy and paste this to you guys. So so you can drop the email. So just drop I'm just gonna copy it to here for you guys. Yeah, so just email this email along with my email, dlong@notesco, right? Subject is IronFX webinar promotion, right? And include your MT4 account number. As long as you put in $250 in your account, you will be able to get access to this indicator. I will unlock it for free for you guys, right? I'm the creator of the indicator, so it's easy for me to unlock and give you guys access, right? It's the good thing is that you don't need to pay any money for it. People have paid quite a bit of money for this, but for IronFX, we have a special promotion where you don't need to pay money. All you need is to have a live account with them. Okay. Now, guys, if you have questions, please send it through now. otherwise, thank you for staying through this entire webinar. I really appreciate you guys hanging out with me. I hope you found this webinar useful. I hope you've learned a lot, right? And yeah, I hope it helps you become a better trader. Okay, guys. Right. Remember, yeah, when you're using candlestick patterns, you're using price action. Exercise proper discretion when you use it, right? If you know how to use it properly, you can really become a better trader. Okay. I'm glad you learned a lot. Thank you guys for sticking throughout. I hope the rest of you guys also learn a lot. Sumit, thank you. Jerome, thank you. Right. Mark, thank you too. Welcome. Right. It's nice hanging out with you guys. Right. I will catch you guys maybe tomorrow or next week. I need to see when is my next webinar. Right. But yeah, have fun. Tomorrow, exactly 24 hours from now, we have a for those of you guys who want to know, I think we have sorry. We have a live trading session, I think. Yeah, we have a live trading session in 24 hours, I think. Thank you, Sven. Right. Thanks for hanging out with us throughout. Yeah, so I think we have one coming up. Let's go for the English one. Yeah, trading straight. Oh, Cassandra will be doing it in 24 hours, right? Really, really good trader. Passed the My Forex funds FTMO quite a number of times already. You can go register for it over here, right? At IronFX. Yeah, IronFX can go register for it over here. She'll be giving you a trading strategy clinic to teach you, help you diagnose your different trading strategies. She's part of the team that I have, right? She's a funded trader, really good trader. Yeah, so go register and see her there tomorrow. All right, guys. Thank you, guys. Thanks for hanging out with me. Right. Stay safe. Trade safe. Peace out, guys. I'll catch you. I'll catch you guys either tomorrow or in a week. Okay. See you guys. Adios. Bye-bye.